What if most investors are losing money, not because of bad luck, but because they ignore one crucial principle?
Benjamin Graham, the father of value investing, teaches how to invest intelligently and survive the market's chaos. Investing isn't about predicting the next boom. It's about understanding risk and value.
The core principle? Margin of safety. Buying assets for less than their true value to protect yourself from loss.
It's not about chasing trends. It's about careful analysis, discipline, and patience. Intelligent investing is deliberate. Focus on undervalued assets. Ignore market noise. Think long-term.
Graham warns against speculation. Chasing hot stocks can destroy wealth fast.
The intelligent investor stays rational, not emotional, during market swings.
Diversification and margin of safety are your shields against volatility.
Even when markets panic, patience and discipline pay off.
Graham's principle. Wealth is built slowly, with knowledge, patience, and rational thinking.
Ignore the noise. Focus on value and protect your downside.
Know the difference between price and value. A stock can be cheap, but still a bad investment if quality is poor. Intelligent investors calculate intrinsic value to make informed decisions, not guesses. Market fluctuations are normal. Emotional reactions are dangerous. Diversification spreads risk. Don't put all your eggs in one basket. The essence of investment management is the management of risks, not the management of returns. Clear. Benjamin Graham.
Think long-term. Avoid being swayed by short-term excitement or fear.
Intelligent investors observe news, but don't react impulsively.
Success is not instant. It's the reward of discipline, patience, and knowledge.
Learn from history. Markets repeat patterns, but intelligent investors stay grounded in principles.
Value investing isn't glamorous. It's about finding quality assets below their intrinsic value.
Analyze balance sheets, income statements, and cash flows. Lou? Knowledge protects your investments.
Emotions are the enemy. Fear and greed destroy portfolios faster than market drops.
Buy with a margin of safety. Pay less than value to protect against errors and uncertainty.
Invest regularly, monitor progress, but don't overreact to daily noise. The intelligent investor is a realist who sells to optimists and buys from pessimists. Patience compounds wealth. Time in the market beats timing the market.
Avoid speculation. Focus on value, not hot tips or headlines.
Look for strong companies trading below intrinsic value. That's where safety lies.
Volatility is normal. Intelligent investors don't panic, but they see opportunity. Study bear markets. Graham shows how losses can be minimized with rational strategies.
Dollar cost averaging reduces risk. Invest steadily, not impulsively.
Know key ratios. PE, PB, debt to equity. They reveal true financial health.
Review, rebalance, and stay disciplined. Don't chase short-term gains.
Knowledge and analysis are your shield against irrational markets. Ignore the noise. Focus on fundamentals, not market chatter.
Follow Graham's principles: value, patience, discipline, and let time reward you.
Markets are noisy. Don't react to every headline. Focus on your strategy. Identify stocks trading below intrinsic value. Q2. These are your opportunities. Check assets, liabilities, and earnings. Strong fundamentals protect your investments.
Emotions are dangerous. Fear and greed destroy portfolios faster than the market.
Intrinsic value is your compass. It tells you what a stock is truly worth.
Always buy with a margin of safety. Pay less than value to reduce risk.
Invest consistently. Monitor progress. But don't overreact to daily market noise.
The intelligent investor is a realist who sells to optimists and buys from pessimists. Benjamin Graham.
Patience compounds wealth. Time in the market beats timing the market.
Focus on quality companies, not hot tips. Diversification protects your portfolio.
Key ratios like PE, P, PB, and debt to equity reveal financial health.
Volatility is normal. Intelligent investors see opportunity, not danger.
Study bear markets. Graham shows how rational strategies minimize losses. Dollar cost averaging reduces risk. Invest steadily over time. Rebalance regularly. Discipline protects your long-term wealth.
Look for strong companies trading below intrinsic value. Safety lies here.
Treat stocks like businesses, not lottery tickets.
Between 10 entities morning. Knowledge and careful analysis are shields against irrational markets.
Ignore the noise. Focus on fundamentals, not rumors.
Follow Graham's principles: value, patience, discipline. Let time reward you.
Intelligent investors don't chase headlines. They follow principles. Seek companies trading below intrinsic value. Quality matters more than popularity. Check liquidity, earning stability, and debt levels. Fundamentals protect your wealth.
Fear and greed are
Intrinsic value guides your decisions. It's your compass in uncertain markets.
Buy with a margin of safety. Pay less than the stock's true worth to reduce risk. Consistency matters. Invest steadily. Review progress. Avoid overreacting to noise.
Investing isn't about beating others at their game. It's about controlling yourself. Who? Benjamin Graham.
Diversification spreads risk. Don't put all your eggs in one basket.
Know your numbers. Key ratios reveal the company's real financial health.
Volatility is part of investing. Stay rational and disciplined.
Learn from history. Rational strategies protect against losses.
Value, patience, and discipline lead you. Graham's principles turn investors into winners.
Master your emotions, follow Graham's intelligent investing principles, and let time reward your patience.